Hey dear, welcome back to my YouTube channel, Accounting Basics Academy with your teacher Maureen. This topic is on understanding day books, or what we call the books of prime entry. What will you learn? You will learn to understand what a day book is, the different types of day books, how to record a day book from a source document, how to close the day book, take the totals to the general ledger accounts, and record in the subsidiary ledger. What is a day book or book of prime entry? It is a book where the first record of a financial transaction is made at the end of each day. It is referred to as a day book of original entry or a day book because it was expected to be done written up every day. For example, we have what is called the sales day book and sales returns day book. We have the discount allowed book. We have several other ones like purchases day book, returns day book, discount allowed day book, discount received, cash book, petty cash. Even the journal is a day book. Here are the source documents for books of prime entry. We have the day books column and the source documents we record from. We have the sales day book. We record invoices issued to customers in the sales day book. In the sales returns day book, we record credit notes issued to customers when they return goods back to the business. Purchases day book, we record invoices received from suppliers we have bought from on credit. When we say we have, I'm assuming here we are business owners, not individuals. When we talk about purchases returns day book, we are talking about recording credit notes, the business has issued to or no received from suppliers. And discount allowed day book is invoices issued to customers, whereby we have, offered discounts. These are, you look at the invoices and then you record the discounts given. Also, you can also extract that information from a remittance advice note. Also, discount received day book, you can also extract information recorded in this day book from either invoices received from suppliers or remittance advice notes. Also, the cash book, in the cash book, we record receipts. These are our sources of information to the cash book. Petty cash book, we look at petty cash vouchers. From there, we record information into the petty cash book. Okay, so looking again, what is recorded in the day books, like I said to you, day book, sales day book, we record credit sales to customers. Sales returns day book, we record credit sales returns from customers. In the purchases day book, we record credit purchases from suppliers. In the purchases returns day book, we record credit purchase returns to suppliers. And also in this discount allowed day book, we record early settlement discounts offered and accepted by customers. In the discount received day book, we record early settlement discount offered and received from suppliers. Cash book, we record cash, check receipts and payments. Petty cash, we record reimbursements and cash received into the petty cash box. For journal, used to record transactions that cannot be recorded in any other day book. That is what we use the journal for. Here we will do some illustration. From the source document here, I have an invoice. ABC is issuing an invoice to WTC Limited. So WTC Limited is a customer of ABC Limited. So ABC has issued an invoice to WTC. So in the book of ABC Limited, we are going to record this invoice. We are going to record this invoice. In the book of ABC Limited, we are going to record this transaction. So the illustration is from source document. This is the source document, the document we are recording from into the daybook, and then we also record in the ledger account. So this information will be extracting information from this document. So here, this is now going to be the sales daybook. This is going to be the sales daybook. I'm going to write it here. The column for date, customer, invoice number, the cost of the entire item, but this is the the what we're concentrating on. So if I go to the total, what I'm going to write here, the date, I look at the date, November 9th, 9th of November, 9th of 11, 9th of November, so it can be 9th of November. The customer is WTC Limited. And then I go and pick up the invoice number 234. And then I pick up the relevant figures here. The relevant figures we need is the net figure, the VAT, and the gross. So 14,175 is the net amount. 14,175, and then the VAT is 2,835, and then the gross amount is 17,010. When you do the calculation yourself, multiplying 14,175 by 20%, you get 2,835. When you add the net amount plus the VAT, it will give you 17,010 pounds. So this is how it is recorded in the sales daybook. Now, coming to the ledger account, then when you come to the ledger account, this is general ledger account. So here will be, I'll just in short write sales ledger control account. This is, I'll now put this one as sales. These are the relevant sales, relevant general ledger accounts, for this credit cell. So, and then VAT. So in the sales ledger control account, this is debtors account, or what we call trade receivables account. It is always a debit balance. So I will write on the debit side the total, the gross amount. So on the debt column, I will write 9th of 11, and then the total amount I will write, description will be SDB from the daybook, and then the amount will be the total 17,010. And then when I go to the sales account, I'll write the net amount, the same date, 9th of November, sales daybook as my description, 14,175. Then when I go to the VAT account, I will write the same date as well, 9th 11 November is SDB, meaning sales daybook. That is where I have extracted the information from, and it will be 2,835. When I add the figure I have written in the sales account and the VAT account, it should equal the figure I've entered in the sales ledger control account. When that is how it is completed. So remember, this is sales account and VAT control account. Okay, so when I add 14,175 plus 2,835, it should equal always what I have entered on the debit side of the sales ledger control account. So this is how it then, but still, even though I have completed the general ledger account, I'll still have to go to the individual account of the customer in the subsidiary ledger, and then complete this aspect. Even though it's not part of the double entry bookkeeping system, I still have to complete in WTC account, which ABC will have, in their record, in their system, and complete this aspect. So meaning on the 9th, on the WTC account in the subsidiary ledger, 9th of November, I'll complete SDB, or I'll write, sales. Okay, it's either I write sales or I write sales daybook, meaning the whole amount, because that is what the whole amount the customer is owing. The customer is owing the entire amount of 17,010. Okay, it's either you write SDB or you write sales here. In some books you see sales, some books will write SDB. It is fine. It will be 17,010, the entire total. That's what you write. Okay. I hope this is clear. I've shown you how to record from source document to the daybook and then to the ledger account. Leave comments, subscribe to this channel, and then this will enable me to be posting more of this foundational knowledge about accounting and bookkeeping. Thank you. Here is join other students, because I have already a comprehensive bookkeeping course on Udemy. In that place I have gone deeper with practice exercises and real examples. You can join other students following the link below, www.udemy.com/course/how to do bookkeeping for beginners and theory. And also the referral code is very important. Subscribe to this channel, hit the notification bell, so that whenever I drop a post or a video, you'll be the first to be notified. Thank you for listening.